Thank you so much for joining us today, Reagan. Today's conversation is really going to be about understanding life insurance and the ways that it can be helpful for women. So let's get into it. I would love for you to tell us a little bit about yourself and what you love most about the work that you do.
Yeah, absolutely. Reagan Heiser, been with State Farm Insurance for about 3 years. Previous to that, I had a little bit of experience in insurance as a broker with the Highland Group out of Ann Arbor.
Now, we'll just kind of dive right into this conversation and we're going to talk about insurance and some of the key differences between term insurance and whole life. And a lot of people talk about them, they toss them all around, sometimes interchangeably. So I'd love if you could explain to everyone what they are and how you should decide which one is better for you.
Absolutely. So I would say that the key differences between term and whole life insurance, just to really oversimplify it, term life insurance is quality of life protection. So your paycheck, your debt, and your savings. Whole life insurance is really more of a wealth management tool. So think things like building cash value and getting tax benefits. So it's whole life is a good way to leave money without it being taxed. Term life is really there to protect you should the unexpected happen.
How should women reassess their life insurance needs after major life events like marriage, divorce, or when they've had children?
So every 2 to 3 years really is what I typically tell people. You're going to want to review who is in your life. Are you getting married? Are you getting divorced? Is there a new job? Have we birthed any children or grandchildren? Has anyone in our family that's close to us, like a spouse or anything, passed away? Are we retiring, purchasing a home, paying off a mortgage, graduating from college? Those are all major life events that you're going to want to sit down and reassess really all of your finances, but insurance and life insurance in particular is a big one.
Now, for our next kind of question, which touches on that, is what are the steps that people need to take so that they can update their beneficiaries after their significant life changes? And why is it important to even do that?
Yeah, so you're going to want to look at changing both maybe the benefit based on your life changes, but also your beneficiaries and who that money is going to be left to upon your passing. So the biggest reason that it's important to make sure that your beneficiaries are updated is because they are the ones that are going to receive the money should you pass. It doesn't matter what your intention is. It doesn't matter if you're going to make that call today. It doesn't matter if you're in the middle of a divorce. If that life policy has your husband or ex-husband's name on it, that policy is going to pay that money to him. So you're going to want to make sure that you're making those changes quickly and that you're at least putting placeholders in who you trust while you're trying to figure out next steps. But yes, keeping those beneficiaries updated is very important. They do not have to be related to you. It can be children, it can be spouse, it can be your parents, sisters, siblings, it can be a friend, a close friend. It can be a person that you're going to leave your pets with and you want to make sure your pets have what they need. It can be a church or a charity. You can list anybody as a beneficiary. It can even go into a trust if that's how you're setting up your final, finances.
Perfect. Okay. Yes. And in a previous episode, I spoke with an estate planning lawyer and she talked about that and making sure that you have things added. But I do think that even if you don't have a trust or a will in place, which we all should, but making sure that you have your designations changed and your beneficiaries as up to date as possible, especially when you have divorces or breakups if you have policies with long-term partners and things like that.
Absolutely. Yep. And the other thing too that's important is that you need to make sure your beneficiaries know what your plan is with your life insurance because I've said before, State Farm or whoever carries your insurance policy, they're not going to know that you've passed away. So it really is going to be up to your beneficiaries to let the insurance company know. So if they don't know that there's a policy sitting there for them, they're not going to know to call us and collect.
Yeah, which nobody wants to just leave money sitting around.
No.
And so if they do, so say a person passes away, this is a thought. So say someone passes away and they have a policy and you haven't been notified, but maybe they passed away and the premiums are no longer paid. Would the beneficiaries lose the policy because it lapses?
Yeah. So what would happen is the policy would cancel Now, because the insured passed away while the policy was still in force, technically that money would go into the unclaimed property that you've probably heard of, where you go to the state. Eventually, it would go to the unclaimed property and it would just sit there waiting for someone to
Okay.
come find it, is what would happen. But the policy itself would cancel once the premiums stopped being paid.
Okay, that's good to know. That's
Mhm.
actually really good to know just in case you find out later that
Yeah.
someone passed away years ago and then you're like, "Oh no," then it's just gone. So always take a look. So I guess
Yep.
taking a look for them, they would go into that unclaimed property in the state
Yep.
that they're in, and then they could look
Exactly.
and see.
Mhm.
Okay. Wonderful. Now, if it is in there, then does it go to the person that the beneficiary is named, or is it just any
It
family member that finds it?
It will go to the last named beneficiary on the
Okay.
policy. Again, that's why it's important to have a couple of different beneficiaries listed because say
Mhm.
your beneficiary was your spouse 10 years later, he didn't know about the policy. He has now passed away too. That money just goes away without another beneficiary being listed. So
Ah,
a
okay.
secondary and
Yeah.
tertiary even. Yeah.
Okay. Okay. That's good to know. That is actually really good to know. So now, as a lot of people have started businesses, right? So
Yep.
how does starting a business or experiencing a career change affect a woman's life insurance need?
So the big thing to think about are one, most people have some form, not everybody, but a lot of people have some form of life insurance through their work. You that when you're no longer employed there. So that is a term policy dependent upon your employment there. So having something in place outside of work is always a good idea. And then adjusting that based on what else is available to you through jobs is going to be important. If you are opening your own company, you're not going to have you're going to want to make sure that you're thinking about all of the different aspects of your home that need to be covered in your life insurance, but you're also going to want to be thinking about your business and if you've got partners or very important people, executives in your company who if something were to happen to them, the company would fail, or say something happened to you, the company would fail, you're going to want insurance, what they call key person insurance, which is a form of life insurance on those people so that they keep operating as well. So
Okay. Okay. So insure everybody.
insure insure everything.
Insure everyone. Okay. Now, what considerations should women keep in mind when they're purchasing a home in relation to their life insurance policy?
Yep. So a couple of different things. One, when you're going to want to include that mortgage, if you're not getting mortgage insurance through either the State Farm does not offer mortgage insurance, but some people do. And what that
Mm-hmm.
does is it says if something happens to the mortgage holder, that's obviously a great way to set it up so that you don't have to worry about anybody else l- losing the house if something were to happen to you as the bill payer. If that's not available or if that's not something that you have on your policy, then you're going to want your life insurance policy to be enough to cover that mortgage plus because they're going to want to you want them to be able to stay in their home.
Okay. Yes, that is always important. And then what about disability insurance?
Mhm.
Because I know you and I have
Yep.
talked about that before.
Yep. So disability insurance is going to work very similarly. So one thing about life insurance that people understand life insurance. They get that, oh, I've got this so that if I pass away, my the people that come after me are going to be taken care of. But people often don't think about what happens if you become disabled and you can't work anymore, which is obviously not as critical as passing away, but also leaves a giant hole. And you're going to want to make sure that you have disability insurance that pays off that mortgage or that at least brings some income into the house if something were to happen to you and you were not able to continue working.
Okay. Okay. Perfect. That's really good to know. That
Yeah,
is important. And I know I hadn't thought about it as I probably should think about it. We think about the life insurance piece, but not the disability piece. So
right.
it's good to know that is an option now.
Yeah.
So, how can women ensure that their life insurance remains adequate if their health changes, right? And then what are the options for policy conversion?
Yeah. So, as your health changes, the big things to think about, and the most important thing is when you first take out a life insurance policy, try to do it while you're young and healthy. And then once you have that policy, try to get a guaranteed insurability rider. What that means is you're going to be rated based on your age and your health at the time you take out that policy. If down the road something were to happen to you, and let's say you get something like cancer, which was
Mhm.
horrible, you wouldn't be able to, without that guaranteed insurability rider, you wouldn't be able to increase the amount of life insurance or get other life insurance without that guaranteed insurability rider because you'd have to go through medical again and that would get denied,
Got
unfortunately.
it.
So it's
Right.
important to do it while you're young, but whenever you do it, try to get that guaranteed insurability rider because that will, as your health changes, that will that will ensure that your health issues aren't affecting your rate.
Nice. Okay. Okay. Now, is it ever possible for life and like your rate to change in the middle of a policy? If you do just you have your coverage and it's there and it's good to go and you are diagnosed with cancer or something like that.
Mhm.
Would that change your policy or is it just it's
No.
there until the end of the policy term?
So it's there until the end of the policy term, and if you have a life insurance policy and you do come down with an illness or an
Mhm.
injury or something that is potentially life-threatening, they can't cancel your policy, they can't increase your rate. Everything has to stay as it is. Now, the one thing they don't have to do is give you more insurance, right?
Okay.
So if you had a $100,000 policy and you find out you have cancer and now all of a sudden you're like, "Oh, wait, I want to make it 1,000,000 because now there's
Mhm.
this big risk here." There without that guaranteed insurability rider, you're not going to be able to do that. With the guaranteed insurability rider, you could increase that. Or with the disability insurance rider, if you became disabled, you would be able to do that, but you can't do that without it, without going through another medical. And if you went through another
Exam.
medical, you wouldn't pass.
Okay. Okay. And we've talked about the medical exams a few
Yeah.
times it's come up. So what does that is it like actually going to the doctor or is it just filling out questions?
So we work with a third party who they are traveling nurses and they come to your
Mhm.
home if you want, or you can go to their offices, either way. But basically, what they do is they take a little bit of blood. They're just testing for different possible diseases. They're also testing for drug use during that time. And then they're taking your weight. They're taking a brief medical history, just trying to find out if you've got any chronic illnesses. They will also contact your doctor and get a copy of your health record. So those things are important to know. They're going to look at your height and weight. They're going to look at whether you've ever been a smoker or whether you're a current smoker, any chronic illnesses, things like that. So any
Okay.
medications
And
that you're
then
on.
okay. And now is that for any level of insurance or is that only when you get to a certain is it up to 50,000 and once you want more than 50,000 then it's that or is it no matter the size of the policy? At
So
least
typically,
through state farm.
yeah, so with traditional policies, that's always going to be the case. There are two types of policies that have very small death benefits. They're really just final expense death benefits where you don't have to qualify first. One is called an instant answer, and it provides, I believe, $15,000 for accidental injury, illness, or death. Or no, I'm sorry, not accidental injury or illness, just accidental death or natural death, but it only goes up to 15,000. There's another one called a guaranteed issue final expense. That's for older people who have a really hard time getting life insurance later in life. And that
Mhm.
again is in increments of 10, 15, or 20,000. And you don't have to pass an exam. A little bit more pricey on the premium, but they will pay out to help pay for your final expenses. And those two,
Okay.
you don't have to pass a medical exam, but any traditional term, universal whole life policy, you're gonna have to do the exam.
Got it. Okay.
Yeah,
So term policies, probably not, but the whole life policies, yes,
absolutely. Mhm.
generally. Okay. Okay. Now, how can life insurance be used to support women who become caregivers? And what should they plan for regarding their own long-term care needs?
In terms of becoming a caregiver, there isn't much. Again, I believe there are other monies available for people who are caregiving, but your life insurance policy, really until something happens to you personally, isn't going to be able to help you in being a caregiver. Now,
Okay.
if you yourself end up requiring long-term care or attendant care due to either injury or age, you
Mhm.
can convert your life policy to a long-term care policy and use your death benefit to help pay your long-term care costs for yourself. And what they would do is they would just help you pay those up until the limit of that death benefit. And then at that death benefit or at your death, they would pay out anything in excess that's left to your
Okay.
beneficiary.
Okay. So if you end up needing care and you have a $100,000 policy and you use $60,000 for your care, then the
40 of it.
remaining 40 would go to your named beneficiaries.
Exactly.
Okay.
Yep.
That's nice, actually.
Yeah.
So then you're not draining, right, all of your other funds in order
Exactly.
to take care of yourself.
Yeah.
That's nice. That's really nice to know. Now, what should women consider regarding life insurance after the loss of a spouse, like emotionally and practically?
Okay. Yeah. Losing a spouse is emotional for you, it's emotional for the kids. And regardless of whether you're losing them through a divorce or you're losing them because they've passed away, the finances for the family are now squarely on your shoulders. And so, a couple of things to think about are you don't have that income anymore. So, what if something were to happen to you? What would be needed to maintain the children's quality of life or the quality of life of anyone in your home that you care for? You'd want to make sure that if you're losing your spouse through a divorce, that somewhere in the divorce decree it says that you're both required to have life insurance so that neither of you are stuck without the other's help to pay for the
Hmm.
children if something were to happen. I think life insurance just helps you feel more secure. It makes sure that the children are at the forefront of the conversation and that they are being provided for no matter what happens over the next 10 to 18 years depending on.
And now for our final question is, what are some essential riders or policy options that women should consider to customize their life insurance based on like their unique circumstances?
Yeah. So there are lots of different options for riders, and I would say the best way to pick the riders that are gonna be best for you is to sit down and have a conversation with your agent so that you can walk through your specific needs. But there are 3 really, because the one both, but there's kind of 3 that I always look at, and one is the guaranteed insurability if you can get it. Again, that just waives you from having to have a medical exam in the future if you want to
Hmm.
increase your limits or open a new policy. The disability waiver, which makes it so you don't have to pay your premiums if you become disabled, but your life insurance policy is still there and will still pay out upon your death. And then the third one, which is 2, is the additional insured or the child rider. And that just allows you to add an additional insured like a child, or you could add your spouse to your policy for a minimal fee. So it's different than that opening up their own policy. They're opening up a little piece of your policy under you.
Okay. So for the one that you just mentioned, so
Mhm.
does it have to be a spouse or a child?
I
Could
think
it
nope,
be?
it can be any mhm, it
Okay.
can
So
be
if you have
anybody.
because sometimes maybe people don't get
Yeah.
married. So maybe it's just like a long term
Yep.
partner
Yep, it can be a
or a
partner, it can
best
be a
friend.
roommate, it can be
Okay.
just a key person in your life that you feel
Yeah.
like their loss would be a burden on you financially or
Right.
emotionally. Yeah.
Okay. Okay. Perfect. Now, I know one of the things that I talk to my clients about when we talk about life insurance, and like why they should have it, right? I'm not licensed
Yeah.
to sell it, but I do tell people why it's important. And one of the things that I tell people is to think about it as a way, especially when it comes to children. We want to make sure we have life insurance policies on our children. And I think most people don't even think about insuring their children because they
Yeah.
think that person doesn't have a job, so I don't need to insure them. One of the things that I suggest people think about is how much time would you need to take off work if something were to happen to your child? I think most jobs will give you like maybe a max of 5 days. And I know if something were to happen to my little one, I'm going to need more than 5 days. So
Absolutely.
to me, the idea of life insurance for your child is to help bury them, but also so that if you
Yep.
need to take a time off work,
Yep.
you can
So
afford to do it.
So there are a few reasons to take out life insurance policies on children. And I know nobody ever wants to talk about that because it
No.
means the absolute worst has happened. But you
Yeah.
also want to be prepared for that. So I think what you're saying is perfect and exactly what I would say. One, how much time are you going to need to grieve? Because, yeah, if your
Mhm.
job's only going to give you a week and you've lost a child, that's not going to cut it. So that you don't have to worry about how the bills are going to get paid while you're processing through your own healing, I think is
Mhm.
very important. The other thing to think about with getting children policies is that they're young and healthy. So they're
Mm.
inexpensive. They can lock in at that healthy young rate and they can and usually you can add on a guaranteed insurability clause on those so that they can increase that as they age. They can increase the amount of death benefit they're getting. At the age of 18, you can transfer that policy to them, and now it becomes their policy, and they can change the beneficiaries to be their spouse, their children, whoever they deem the best fit for that policy. So, things to think about when you're thinking about
Yeah.
insuring children, which I know is difficult conversation, but important.
It is. Yeah, okay, and then we can so if a parent does open a policy for their child
Mhm.
and then they become 18, they can convert it, like, do they have to convert it, or can the parent continue to just pay
Yep.
it
You
forever?
can you can continue to pay it forever. It's
Mm,
up to you. Yeah. But when you pass away, that policy would either have to be transferred to them or it would dissolve at that point.
it would dissolve. Okay,
Yeah.
okay, that's good to know, okay, but if they convert the policy to a separate policy, like, they're 21 and now
Yep.
they're on their own and they wanna take it over, can the parent continue to pay the policy
Yeah.
premium, or do
Oh,
they have to do it
anybody.
themselves?
Anybody can pay the premium policy, the policy premium. We don't care who pays it.
As long as it's paid every month.
Yep.
Okay. Okay. And my final thought, this has been really helpful. You've been
Oh
like giving
yeah,
me a lot to think about.
absolutely.
And I think we'll definitely give the people watching this something to think about as like our like outro and what we want to think about moving forward. If you have any tips, like your big tips that you
Mhm.
like to share, I'd love for you to just share those with us
Yeah.
now.
So I love sharing tips. It's one of my favorite. My two big tips for life insurance. So this is just life insurance. Life insurance should always be supported by a healthy disability policy. What the biggest thing we do is we protect ourselves and our families when we die, but we don't protect ourselves and our families when we become disabled, which is just as traumatic for everybody. You're still
Yeah.
not able to pay bills. You're still not able to work and bring in money. It is still emotionally and physically hard on the people left taking care of you. So having a disability policy in place, if you're going to have life, you should have disability. A lot of people get disability through work. It's important to understand what that covers and for how long, and make sure that you've got something outside of work if you feel you need it to continue protecting your family as things
Mhm.
may or may not happen to you. The other thing, and this one's a little more lighthearted, is when you're thinking about life insurance and how much you might need, because that's obviously the biggest question is I don't know how much
Mhm.
I need. Very simple way to calculate it is using what I like to call the life model, which is LIFE. The L is for your liabilities. This is going to be for major debts that you have, primarily your mortgage. So if that is not
Mhm.
covered under the mortgage policy, a mortgage payment payoff policy, you're going to want that included in the life insurance so that your family doesn't have to worry about how they're going to maintain their home. The second is the I. That's for your income. You want to take your yearly salary and you want to multiply it by 10. 10 years of your salary is what your family, in theory, would need to continue on paying bills and living the quality of life that they've established while they're healing and trying to get through this new transition in their life. The F is for final expenses. You want to make sure that there's a little pot of money in there for your burial, your cremation, your services. If you decide you want to be buried in another state or another country, all of that is going to cost money, and you don't want that to fall on the shoulders of the people who are grieving. So having built in. And then lastly, the E is for education or extra costs. And that's for things like if you were planning to pay for your daughter's wedding or your daughter's college education, or you wanted to get a nest egg for them so that they could buy their first home. Those are things you're going to want to think about if you want money there for them to still do that without you being there to help them.
Okay.
So that's what it is. It's light. It's pretty easy. You can sit down with a little notepad and figure it out pretty quickly. And even if you get a number that is scary, because that 10 times your income usually bumps that up and makes it a little, remember, something is better than nothing. So even if you're like, okay, I need $1 million, I don't think I can afford $1 million. Let's look at what you can afford and what we can cover, because that's, at the end of the day, you're just trying to lessen the burden on the people you leave behind. So.
Oh, those are great tips. I love that. I love a good acronym.
Me too. Yes, me too.
I love that so much. I appreciate your time today. Thank you so much for chatting with us and sharing your wisdom. And how can people get a hold of you if they have additional questions or might want to start their own policies?
Yeah, again, I'm with State Farm. I'm with Shirley Redrick State Farm out of Ypsilanti, Michigan. We're located on Pearl Street, right downtown off of Michigan Ave and Washington area. And our phone number is 734-482-6570. And I love visitors, and we can talk about your needs and see if there's something we can put in place to help you out. I would love to do that.
Perfect. Awesome. And I'll also be adding that in the description of this video as well, so people can reach out to you. So again, thank you so much.
All right. Thank you, Ebony.